Welcome back to Dividend Growth UK. I'm David. First of all, let's get this disclaimer out the way. This channel is not financial advice. I am not a qualified financial advisor. Everything here reflects what I do with my own money, and it's not a recommendation for anyone else. Investments can go up as well as down. Your capital is at risk. Always do your own research, and for regulated advice, consult a qualified IFA. Okay, so it took 10 months. A letter went to an old address. I forgot about it for several months. I had to chase it, provide additional evidence, and wait on hold for a lot of minutes. Then go through further checks because of the size of the amount. But eventually, it landed, cleared in the bank, and transferred straight into my ISA. What am I talking about? Well, in this episode, I want to tell you about what this cheque actually is, why a huge number of higher rate taxpayers are missing out on exactly this kind of money every single year, and how I have deployed the full amount inside the ISA. So when you contribute to a pension in the UK, the government adds tax relief. If you're a basic rate taxpayer, you contribute £80 and the government tops it up to £100. That 20% relief is added automatically, or in my case, Interactive Investor applies for it automatically for me. You do not have to do anything to claim it, but if you are a higher rate taxpayer paying 40% income tax, you are entitled to an additional 20% on top of that. And that extra 20% does not come automatically. You have to claim it yourself. Now, research consistently shows that a significant number of higher rate taxpayers simply do not claim it. Some do not know it exists, some assume it's complicated, and some think you need an accountant or a self-assessment return to do it. I claim mine directly online at tax.service.gov.uk. No accountant, no self-assessment form, just straightforward online claim. The reality is, it wasn't quick. Now, I want to be honest about this. I think most content around tax relief makes it sound straightforward, but my experience, it wasn't. HMRC wrote to me requesting more information. That letter went to an old address and I never received it. Months passed, I forgot about it entirely. I found out about the letter, provided the additional evidence they needed, and then waited a further 3 months while they ran additional checks, which they told me were necessary because of the size of the amount. But here's the thing. At the end of 10 months, £10,669 landed in my bank account. That is money I was entitled to, money that was sitting with HMRC that belongs to me. The process was slow and at times frustrating, but the outcome made every bit of it worth it. And if I actually sit down and quantify the time I physically spent on this, I'd say it's somewhere in the region of about 8 hours. So 10 grand for a day's work, I think we'd all sign up for that. But then I've also got a colleague who contacted them by phone. They altered his tax code and it was very straightforward for him. So who knows? I think it might be different on a case-by-case basis. So that £10,669, that full amount went into my ISA. I still have £7,783 of my annual ISA allowance remaining, £10,500 deployed across existing ISA holdings and some new additions. So let me go through them. Standard Life. £2,500, the largest single top-up. Standard Life is already one of my biggest ISA positions, and this adds meaningfully to it. Now a new addition, International Public Partnerships, with £2,000. It's an infrastructure income trust, long duration, inflation-linked revenues, defensive income, and it gets a meaningful start. Next up, we have Legal and General, £1,500. One of the UK's most reliable dividend payers, adding to the position at current levels. Then we have Primary Health Properties with £1,500. GP Surgery REIT, government-backed rental income, long leases, consistent dividends, adding to the position. Then we have £600 in Invesco Bond Income Plus. High Yield Bond Investment Trust, monthly income, attractive yield, adding to the position. CVC Income Growth with £500. European Leveraged Loan Fund, floating rate income, defensive in a higher rate environment. The remaining holdings within my ISA, Big Box REIT, Greencoat UK Wind, British American Tobacco, Supermarket Income REIT, Man High Yield, Aviva and M&G, well, they'll continue at their standard monthly investment amounts. And finally, a one-off purchase of £390 into Rex Fang, FEPI, the high yield covered call ETF. Claiming the relief back and putting it straight into the ISA means it now sits in a tax-free wrapper, generating income that HMRC cannot touch again. That is the compounding advantage of using both a SIPP and an ISA together. The pension contribution attracts tax relief, the relief comes back as cash, the cash goes into the ISA, and the ISA generates tax-free income. Every step of the system is working. Now some might ask, why my ISA and not my SIPP? Theoretically, I could have added this 10,000 and claimed another 40% relief on that and continued that cycle forever, really, I think. But my SIP is now at the point where it doesn't need any additional support from me. So I can just let that continue to compound with its average of 5+% per year for the next 14 years and forget about it. My ISA is a different machine altogether. This is a cash generating engine for me, designed with a couple of things in mind. Firstly, Project Porsche, as I like to call it. For a lot of years now, I've had a dream of being a Porsche wanker. So my plan had been for my ISA to pay for the loan. Secondly, it's also designed to retire me as fast as possible. Once the dividends from the ISA can cover the cost of my current life, then that's me done. You'll find me on a beach drinking cocktails with little straw hats. So 10 months, a lot of waiting, but £10,669 deployed into an ISA. All of it generating income that now compounds tax-free. If you are a higher rate taxpayer contributing to a pension and you have not claimed your additional relief, the place to start is tax.service.gov.uk. Remember, it's your money. Go and get it. The ISA and the SIP both sit on Interactive Investor. The link is in the description if you want to take a look. Subscribe to follow along as the portfolio grows, and I'll see you next time. Bye bye now.